Welcome traders to another episode of Investing hosted by me, Rishi. On this holiday episode, I want to take it to the last step when it comes to finding the right stock. Progressing through the top-down approach, we've already figured out how to analyze a macroeconomy along with sectors and industries. So the final step that we have is just to look at individual companies and figure out which ones present themselves with the best growth opportunities for us investors. There are plenty of stocks to choose from across various industries, and our first job is to cut down the batch to select a few stocks that have the potential we're looking to capitalize off of. This can be done through the usage of screeners. Screeners are very abundant all over the internet, and some popular ones include FinViz, which is the one that you can see on the screen right now, MarketSmith, CML Pattern Finder, and TradingView's own screener. We can input a set of criteria and standards into the screener that we want a given stock to be meeting or exceeding. And by engaging in the search, we'll be able to find a list of stocks that are worth diving deeper into. Okay, so let's take a look at the screener. And so the filters that I like to add to my screenings are based on the CAN-SLIM strategy. So the first thing I like to see is earnings per share growth that is really high. So we can put over 25% for this year as well as next year. I like to see a return of equity on equity that's above 15 to 17%. So I will add that in. Then the average volume that I like to see is over 500,000. We want to make sure that our stocks are liquid. And then on the 50-day SMA, I like to see the price above this. And so now out of the 10,000 stocks that we were originally provided with, we are now provided with a list of 28, and this significantly cuts down that original list. And so now that I've received this list of stocks, I can glance over a summarized document of their financial performances to further filter down these prospects, and then choose a couple of these stocks and go even deeper into my analysis. The screening wasn't the only thing that we were going to do, however. Just looking at one or two quantitative metrics doesn't necessarily tell us all too much about the investment that we're going to make. By purchasing shares of a stock, we're becoming shareholders of a company. So it's very important to understand the structure, operations, and strategy about a company prior to making any major decisions. Many of these indicators and related metrics can be located in the Form 10-K that every United States publicly traded company must file annually, discussing financial performance. Form 10-Ks can be found on the EDGAR database on the Securities and Exchange Commission's website, and with the simple typing of the company's stock ticker into the database, we can find their financial reports. So from our screening, I found that NVIDIA was one of the companies that was listed, so we can put its stock ticker into the database and take our 10K annual report and see this filing. So if we open this document, now this is the Form 10K that I'm discussing. So within the Form 10K, some important sections that are worth actually looking at in the beginning include business, which is typically the first portion. This can help us understand the purpose of the business and the product or service that's being sold with a brief summary of operations. So item 1, business. We get a little bit of summary about the company, businesses, markets, and just talking about the structure and operations that the company overtakes. Another crucial portion within the Form 10K is the MD&A section, or Management Discussion and Analysis of Financial Condition and Results of Operations. The company's management comprehensively analyzes and discusses the financial performance of the company and its current condition. This section also briefly mentions key outlook and business strategy, and also goes into depth about the many key influences that affected the company's results, giving some sort of context behind the bulk of the data that's provided within the financial statements. So we can see here the MD&A, and then it gets into more of the financial data within the fiscal year. Like I'm doing now, when I'm analyzing a company in depth, I make sure to take really good notes, typically using a SWOT analysis, or a strengths, weaknesses, opportunities, and threats chart to compile all my data into a single table that gives me a foundational understanding for the company that I'm analyzing. So here we can see that the strengths and weaknesses on the top would be my internal factors, and the opportunities and threats that I'm looking at are the external factors. And so this is really similar to how I use another notes framework, which is called the Porter's Five Forces model, to actively understand the weaknesses and strengths of a given industry. And so I just like to use these notes models. You can try out different things as well, but these are just the ones that I like to suggest. It is also important that we understand the quantitative financial metrics of a company as well before making an investment. The three most important financial statements that we're going to be looking at include the income statement, balance sheet, and cash flow statement. So I'm going to open the 10Q, which is the quarterly report, instead of the 10K so we can see more updated financial data. Okay, so I'll scroll down and we can see our first statement. So this is the income statement. This is crucial for investors who are doing in-depth firm research, and it displays the revenue from primary business activities, expenses incurred from generating revenue, and the net income, which is the difference between revenue and expenses. By comparing a company's financial data from previous periods, we can see the revenue growth, earnings per share changes, and changes in profitability, whether it's a quarter-to-quarter or year-to-year comparison. Personally, as I mentioned before, I follow the CANSOM strategy and look for increasing earnings from quarter to quarter, specifically 25% or more increase in earnings per share. And then on a yearly basis, I look to see an annual increase of 25% in earnings per share as well, consistently prevailing over 3 to 5 years. Okay, so the next document is the balance sheet. And in the balance sheet, we see details involving assets, liabilities, and shareholder equity being disclosed. This tells us what a company owns and what a company owes, giving insights regarding the company's ability to meet debt obligations. The balance sheets follow the basic accounting principle that assets equal liabilities plus shareholder equity. What is owed is equal to how much that's owned, as assets are to be paid from borrowing, which are liabilities, or receiving funds from investors, which is the shareholder equity. Okay, and then third, we have the cash flow statement. This statement provides quantitative metrics regarding the cash inflows and outflows that a company partakes in, including operating, investing, and financing activities. The operating activities show the cash that's being utilized or gained in the core business activities. Investing activities show both economic investment in physical capital along with investment in financial assets and securities. The financial activities involve the transactions to fund the company, like debt, equity, and dividends. Apart from the overall business operations and results, I also like to look in depth into the management of a company and relevant industry competitors. Regarding management, the people who are on the board or are executive officers should be people that have a strong and clean background, along with the motive to or history of growing businesses. On the asset side, we can also look for insider transactions for management, which can give us signals indicating whether corporate insiders have confidence in the company at the moment. However, this depends on the magnitude of the transactions and the timing relative to current events. There are always competitors that are existent, making it vital for a comparison to also be done between the financials of the chosen company and of the competitors. If the competitors have better financials and exceed the chosen company in other strategic operational metrics, I often switch from the chosen company to the competitor. After all, we are looking for market leaders who are at the front of their industry with solid growth. These are our leaders. We don't want to be following the laggers. Now that we've completed a thorough fundamental analysis of NVIDIA, technical analysis is definitely the next move, used to decide the entry and exit points when capturing our movements. We can see a 10 EMA, 21 EMA, 50 SMA, and 200 SMA as the indicators that are currently lined up on the screen. When deciding an entry point, we want to make sure that we have a stable entry that doesn't rely on faulty runs. For example, around October of 2022, we can see that the price steadily began to increase, but still traded under the 200 SMA. This is not a sign of a stock being strong and definitely would not be recommended as a point of entry. However, in late January, we can see that the price rose above the 200 SMA, along with the rest of the moving averages also climbing above at a sharp angle. During this time of January going into February of 2023, there were many solid entry points. As we mentioned before, indications of strong bull markets can be seen when a short-term 50 SMA crosses the longer-term 200 SMA, which is called a golden cross. Here, we could have entered when the price pulled back onto the 10 or 21 EMA. So, for example, we could have entered here, or here, or here, and there are other examples as well. In current times, the stock has been consolidating and trading between $400 and $500. Again, it's important to remember that you should be aligning your fundamental analysis with your technical analysis, as it's not as beneficial to rely just on one method. And that's the end of this video. You've now learned how to conduct a top-down analysis. You've learned how to understand the macroeconomy, you've learned how to understand the sectors and industries, and now individual stocks. In the next episode, I'm going to discuss the cancel strategy, which I mentioned in this video. Thank you so much for watching, and I hope to see you in next episodes. Have a happy new year.